Welcome to the Techno Fundamental Report for June the 5th. You've got to weed your garden, which means to me that, if you're building a portfolio and let's say you have 10 stocks in that portfolio and let's say 3 to 5 of them are doing well and then 3 to 5 of them are doing poorly, the 3 to 5 that are doing poorly will eat up your returns on the ones that are doing well. So you got to get them out of the portfolio. Jesse Livermore, cut your losses quickly without hesitation. Don't waste time on what you might have done differently. Confucius says if you make a mistake and you don't correct it, that's a mistake. William O'Neill says, my philosophy is that all stocks are bad. There are no good stocks unless they go up in price. If they go down instead, you have to cut your losses fast. Letting losses run is the most serious mistake made by most investors. Bernard Baruch, if you have made a mistake, cut your losses as quickly as possible. So keep your garden clean and let your winners run, cut your losses quick, bottom line. I thought this was interesting. If you mix politics with investing, according to Buffett, you're making a big mistake, and here's why. We went back to January 1st, 1953, invested $10,000 in the S&P 500. Then we assumed that we only invested during Republican presidents. Well, the 10,000 grew to roughly 300,000. Then if we only invested under Democrat presidents, we made a lot more. It was almost 700,000. Now, the reason for this is that between 95 and 2000, which was the dot-com cycle, Bill Clinton was president, and all I can tell you is between 1995 and 2000, that was the most prolific bull market I've ever experienced in 50 years. So Clinton just happened to be in the right place at the right time because the internet was invented. However, if you just blew it all off and just said, I don't care about politics, your 10,000 grew to 20 million. So you can see what Buffett's talking about. Now, the IPO market, we talked about this last week. We really need to keep an eye on the IPO market. And here's why. This is back in 1997, May of 97. Amazon goes public, IPO. And when I can remember when I first found the stock, I actually had a client call me up and say he didn't like that name, Amazon. I said, well, look, we just bought a stock called Yahoo, so just get comfortable with it. But anyway, the point here is if you watch the IPO market, you're going to see where the money's going. You're going to see where the profits are being made. So when we bought into Amazon after the IPO, it really became apparent to us that the internet was going to be a great place to invest. And sure enough, it was. Now, let's take a look at the market here real quick. We've got the NASDAQ here. We think we've made a final major low here on April the 7th. Now, what I mean by major low is this. Back in the dot-com bust, the market broke down in 2000. We didn't make a major low until March of 03. The financial crisis, 08, we made a major low in March of 08. So we think this is a major low and we're starting a new bull market. And the good news here is we're starting to see the index is starting to trend. We're seeing higher highs and higher lows. That's uptrend. So this is looking good. I think we're in a bull market, and I think we made our major low on the 7th. Now, on the S&P, we have the same story. 3 out of 4 stocks are going to follow the indexes, so just be really aware of that. So monitoring the indexes is important. So if we look at the primary trend, the 200-day moving average, you can see here that on the S&P, where primary trend is up, NASDAQ primary trend is up, and you're seeing new highs in here. New highs minus new lows have now turned positive. So we're starting to see some new highs for a change. Unemployment rate continues to stay steady for the month of April. 4.2 is kind of where it's been. Now, if you look at it over a long period of time, it really, other than COVID, and then back here you had the financial crisis. So unemployment is staying very steady. It got down to 3.5%, and we're back up to 4.2. It's really a very. If we're going to have a recession, this is what you want to watch. We start seeing, unemployment numbers up in this area here. Well, then we may be having a recession. The aggression index continues to be positive. In fact, it just recently made a new relatively high, this is the old high here, but that was the beginning of the drop. So the aggression index is looking positive. Interest rates are steady. In fact, we're kind of starting to see a decline here. The power index is saying, the Fed's probably going to cut interest rates. So interest rates are steady. Now, I will say that, the Fed and the Treasury, they're printing money. I mean, we're seeing a lot of quantitative easing here. So that's the primary reason for this. But, you can't argue with it. The volatility index, the VIX, is back into a very normal zone here. Volatility is under control. Risk is under control. New lows. Now, the purpose of looking at the new lows is that if you start getting a whole bunch of new lows, the sellers are in control of the market. Now, right now, it looks like to me the sellers have dried up. So new lows are positive. Now, I wanted to mention GE here real quick because we've been talking about, initial public offerings. Several years ago, GE got into a lot of financial trouble. They went into financial services, which was long-term care insurance. They lost their shirt. The company almost went out of business. But what they did was they brought in new management, and they broke the company up into, the first thing they did is they spun off that financial services losing business, cut their losses. And then they broke the company up into three groups: aerospace, healthcare, and energy. Now, the aerospace group, again, is benefiting from, jet engines, and that's their primary business. But the thing is interesting, they make more money off the servicing of the engines versus what they make from selling it. So GE Aerospace, you can see here, this is really a pretty chart, and it's just showing you that, there are stocks out there that are really starting to look good here. GE Vernova, that's the energy division. They do gas turbines, they do nuclear, they do all kinds of power plant equipment, and that's looking really positive here. So it's kind of an AI play because they're saying we need a lot of electricity. Well, this company's in that business. So if you have any questions, please let me know. Thank you very much.